Good evening once again. Saturday's evening session. And like every Saturday, we would like to take a deeper look into the sectoral indices and of course the benchmark Nifty. And with today's session, I will be going back to our RRG graphs. Yes, but that's coming up a little later. First, what's happening? Well, I like to take one or two words to explain a bigger phenomena. And I would say for the market that just went by, tough times. Especially from a long perspective, it's definitely tough time. We are more or less midway in the month of Feb. Today is the 15th of Feb 2025. And we can see 5 consecutive months of 4.5 consecutive months of negative. Monthly charts are still very much in the negative territory, both in terms of trend momentum. Weekly, still very much down. Daily, if you remember, we had some bit of a bounce back. It was not bad. It was encouraging, but it could not sustain. The fact that it could not sustain is a clear sign that the higher time frames, the weakness from the higher time frames is very, very evident. It's very obvious. The markets are not in any kind of a hurry to reverse. Markets probably are waiting for some cues, some signs. Unless those signs comes, I don't think so that the market wants to go up. It's hesitant. And maybe this hesitancy will take us further down. If we go by the weekly charts, nothing as such positive on the charts. We can call this a last engulfing. Please remember, every time I use the word last engulfing, and it had happened in the candlesticks parlance couple of times, 3 times in the recent past. It's not the best of last engulfing, but whenever you see any last engulfing, please understand the market needs to go above that last engulfing's high. If this doesn't happen, it's not a last engulfing. It can be a last engulfing. So from this point of view, just consider last week's high. This is the level, a little above 23,500 for the Nifty spot. Unless this level is taken out, there's no immediate reason to even sound bullish. Okay, you can think and keep it at the thought level. What we had was a bounce back on the daily time frame, a pretty decent one, and a pretty decent giveaway. In the recent giveaway, you will notice that there was bounce backs from the intraday lows, as if the market is trying to support or trying to hold on to the 22,800 fractal low. Only time will tell us whether there is merit at this 22,800 or not. If not, higher time frames are anyways weak. Breaking further down is not a big deal. Reversing from here is definitely a big deal. Can it reverse? On our charts right now, there's nothing. I can only give you 2 levels. Friday's high, weekly high. For Friday's high, it's around close to 23,130. So 23,100, 23,150. And the weekly high is around 23,568. So let's say 23,600. So you can use 23,150, level 1, 23,560, 23,600, level 2. Unless these 2 levels are not, scaled, don't be very, very bullish. I will, before I go to the bank Nifty and the rest of the sectors, I'll again repeat the same sentence that I've been repeating for a few weeks now. This is the market where either you are an extremely short-term trader or an extremely long-term trader, which means you're an intraday trader. It can be a good day. How does it matter? Every day is a new day. One day bullish, one day bearish, morning bearish, evening bullish, whatever. For intraday trader, it doesn't matter. And the long-term investor, for him also it wouldn't matter if the stock is down another 5-10% from his buy price, because he's going to hold on to it, he's going to accumulate. It's the mid zone of trading. It's the mid zone of short-term, intermediate-term trading that is turning out to be a little difficult. Of course, on the long side, not so on the short side. That's for derivatives traders. Okay? So Nifty, no signs of bottoming out. We'll see if these lows hold or not. First level will be Friday's high. Next level will be weekly high. That's it. On the downside, anyways, the markets are slipping. So if a breakdown comes, it can fall further down, which is not a surprise, and it can, slide further. So don't be in a hurry to buy into the market from a short-term trading point of view. Broader markets were worse, right? We've been very clear of the fact that the small caps did not manage the kind of bounce back that the Nifty has managed, or the bank Nifty. The small cap, especially the small cap index, has been particularly brutal. The sell-offs were pretty sharp, continuous. However, if I take a look at the small cap on the daily time frame, we will start to notice a T1 M1 divergence. Our short-term trend and our short-term momentum indicators have just started to build up. I will probably take my sentence back and saying that it's a divergence. It is not a divergence. It can turn out to be a divergence. There are signs of it. There's a possibility of it, which means that this zone may not be a very good zone to go bearish. Maybe wait for a bounce back like this, and then maybe look for fresh shots on a rise rather than a breakdown. So do not do breakdown trades here. Similarly, the CNX mid cap also has its share of pretty sharp sell-off. Nothing strong on the weekly. Sorry for that. Nothing strong on the weekly. In fact, the weekly candlestick, if you see, it's pretty bad. It's like almost like a negative Marubozu. Similar kind of a formation is there. It is not confirmed, so don't get too excited about this formation. It's weak. All the readings are weak. If you take a look at the sectoral indices, why don't we do a side-by-side analysis with the RRG graphs and our usual charts? I think that will add a lot of value. So after using RRG graphs on stockcharts.com for a couple of years, 3 years, I believe I've used it on that particular platform. Recently, one of my community members helped me to realize that there are other softwares which are offering us RRG. Now, Strike is one of them. I did take a look at it. I found the software pretty impressive, and this will be my first attempt to use RRG graphs on this particular platform. So good thing is it has already got all the sectoral charts in place. These are the indices. Okay. And benchmark, I'm going to change it to Nifty 500. I think 500 behaves better than 50. And over here, I'm going to increase the days. I will look at a weekly time frame. I'm not much into RRG from a daily time frame. And the range, I'll go from weekly. For weekly, I'll use around 2 weeks, which will give me a 3-month perspective. Number of weeks, 12 weeks. Weekly time frame, benchmark Nifty 500, all the sectoral indices. It's too much. It's too much over here. And let's fit it. Yeah, let's fit it. See, because I'm talking about RRG graph after quite some time, RRG graphs gives us rotational graphs of sectors and stocks vis-a-vis a benchmark. And there are 4 quadrants: leading quadrant, weakening quadrant, lagging quadrant, and improving quadrant. Okay. It's important to know where the particular stock or sector lies. For example, in this case, IT has come down from being a leading quadrant to down to weakening quadrant. Okay? All these movements of the sectors within the RRG graphs generally happens in a clockwise manner. So if a sector or a stock is within the leading, eventually it might do like this and this, but eventually वो weakening में आएगा. It may do like this, but eventually it will go lagging. Eventually it will go improving, and then so the movement is like clockwise, but it's not a clean clockwise like beautifully line like this. No, it can go like down and up and down, and then so lot of it all depends on the price. Everything is price determined by price. What we are going to do is we are going to sort it in terms of the tails. Okay, now I am not too sure, just give me a moment, if I change the time frames. Yeah, good, perfect. So we are looking at a 1 minute. In fact, let's make it a little bit more interesting. Let me go back to the Nifty chart. Okay, and if I just quickly check the date range from this week to this week, we've got 19 weeks of correction. Is that all right? 19 weeks of correction on the weekly. So with that logic, एक काम करते हैं, why don't we go to our RRG graphs and यहाँ पे that 12 weeks को 19 weeks कर देते हैं. ठीक है? So we'll get a perspective, we'll get some understanding since the market topped out, what has happened. Now I know there's a lot of sectors here, so what I would like to do first thing is I would like to deselect few of them. I would like to keep the main sectoral ones and बाकी जो thematic है, जो broad based है, उनको निकाल देता हूँ. हेल्थ केयर फार्मा में एक ही रखता हूँ. It doesn't make sense to keep both. So I am removing the broad-based ones. It won't make much sense because we would be interested to take a look at mainly the sectoral. Yeah, this is it, more or less. Let's fit it. Now we will sort in terms of tail. अभी tail से sort करेंगे. पहले sort कर लेते percentage change. First, let's sort it in terms of percentage change over the last 19 weeks. And what do we see? Large cap, mid cap, 12.6%. Consumption story is down. We understand that. Private bank is down 5.5%. Now look at where Nifty lies. On a 19 weeks close to close basis, it's 7.74%. I'm just cross-checking. I generally would like to do that how it is considering. So probably it is considering from this. So around 8.2 is what my Nifty weekly chart is saying. So I'm going to make it 20 weeks. I'm going to consider this one also. Okay. I hope you understood what I did. I just cross-checked on my chart and I found that the trading view weekly chart of Nifty is giving me around 8%. It's on 7.7 closing price. So I'm going to do it 20 weeks. That's it. So consumption, of course, has been, I don't not want to select it. Is that okay? What just happened? 20 weeks, percentage change. Nah, I think there is something we need to work at this. Yeah, thanks for that. Time has shifted. For some reason, the time has shifted. Thanks a lot. I hope. Data range. So it has 5 years of data with it. I think this makes sense. I'm using it for the first time, so I'll get a good hang of it. Am I okay? And this is fine? Yeah. So time had shifted. Now we have the whole thing. Now we sort it in terms of percentage. Reality, okay, over the last 12 weeks. I'll cross check all this. Okay? I will not do it in the middle of a class and waste time. But it shows that 11.6 is reality. I'm not too sure about these numbers. But when 14 is here, why are you showing? Okay. Now I get it. It is sorting within the quadrant. It's not sorting the whole thing. Ideally, you should sort the whole thing. This can be a suggestion from my side to the software. I understood now. It's sorting within the quadrant. It's sorting within the quadrant. Chalo, theek hai. So within the, let's sort the tail then. Mid cap is showing. So reality is still in a positive quadrant. So see how reality had moved from lagging over the last 20 weeks, had gone improving, and it's losing vertical distance. I understand that the momentum of the relative strength is slowing down if you're coming down. So reality is losing momentum of strength. Private bank is losing momentum of strength. It could not actually, you see, improving, say, it did manage to go to the leading quadrant, but it's losing and picking up a little bit over the last couple of. See, when the RRG graph is picking up, don't misunderstand that the private sector bank is also picking up. It is about relative strength. So according to the RRG graphs, considering the ones we have checked here, private banks and realty are still relatively stronger. और अगर आप मुझे पूछेंगे, looking at the RRG graphs angle, private bank is better off than realty because realty is falling. What we will do now, we will go to our charts and we'll take a look at the Nifty private bank. Private bank we can definitely analyze. First, let's take a look at the bank Nifty. And bank Nifty analysis, we had done this last week. The weekly chart is at a very important possible polarity juncture. High chance. The previous supports have started to act as resistance. We were looking for a break of last week's low, and that this week has happened. So the chances are high that this will turn out to be a resistance. Of course, if the market falls further down, it breaks below last week's low, these levels will be taken down. So the bank Nifty chart is predominantly bearish. The only savior, the only possibility is the recent move of the bank Nifty with the Nifty had a nice trend momentum sync, and this is turning out to be a deeper retracement, right? It has a red HAGB last week. I'll keep it simple. If the market and especially the bank Nifty has to go up, then it has to go up next week itself, within the next 1 or 2 weeks. It has to scale above last week's high, make or break. Very, very clear indications on the chart, make or break. Now, I will say 60-40. 60% on the downside possibility, 40% on the upside possibility. 60% primarily because my trend indicators are negative, my momentum indicators are negative, my larger time frames are negative, a polarity is shaping up where supports can become resistance. The overall markets are weak. So majority of my markers are negative. You have any positive marker? Well, the only positive marker that I have is a red HAGB after a rally, which can be a deep sign of a deep retracement. That's number one. The number two would be those RRG graph, which is pointing at the leading quadrant sloping up. And the third is when you expect the least, that's when it happens. And so I'm sure the overall markets are expecting markets to fall further moving forward next week. So a lot of expectation will be on the downside. And I've seen time and again when majority of the expectation shifts, tilts towards a certain size, it's very likely the opposite happens and everyone gets surprised. So I'm getting myself ready. And so a move above last week's high, a make possibility, a break below last week's low, a break possibility, with the latter being more of a possibility because of the overall market. So bank Nifty is predominantly negative. Nothing doing unless last week's high is taken out. Same logic applies to the bank Nifty. Okay. We saw reality in the leading quadrant. So we'll quickly take a look at reality, why it's in the leading quadrant. It's because predominantly it has gone through a great run up on the monthly charts. Sheer sell off, strong sell off on the weekly time frame. Trend and momentum are both very much weak, and the daily is going through some serious weakness. Though the RRG chart is in a leading quadrant, it is not a very good zone you should look to buy, not yet. The trend indicators are going down, the momentum indicators are not going down that much. So there is a possibility of a divergence shaping up. Abhi tak confirm nahi hai, time will tell us. So if I combine my readings of price, multi-time frame and RRG, it tells me too late to go short, too early to go long. Wait out. Okay, done. I'll pace up a little bit. Coming down to the improving quadrant. Now this is my favorite quadrant. I always liked the improving quadrant because यहाँ से it can lead towards the leading quadrant. So let's see, यहाँ पे कौन है? Oil and gas is there. Interesting. Commodities is there. Picking up commodities, okay. Auto is there. Very interesting. And FMCG is there. So you can clearly see, those who are new to RRG graphs, you can clearly see the flow of these weekly movements, relative strength movements, are clockwise. Oil and gas. Now, oil and gas has been, or energy pack, has particularly been in the lagging quadrant. Now it picked up vertical distance and it has come to improving quadrant. This, however, will not go in that well when we take a look at the CNX energy chart, because this is some serious weakness it is going through. Okay, I'm not too sure if they have taken CNX energy. Have they? Oh, they have taken CNX energy. So I have to consider CNX energy. There you are. Okay, so it's picking up. So then I have to create an oil and gas separate, energy separate. Lot of overlapping हो जाता है. Energy and oil and gas में आपको बहुत overlapping मिलेगा. Nevertheless, energy is gaining some height, still in the lagging quadrant. Price indicates from the charts the same thing. Stay away, wait out from the energy. Auto में कोई confusion नहीं है. Why has auto come to an improving quadrant? Is you will see that the recent bounce back of auto was exceptional. However, the retracement is also exceptional. Big range expansion on the weekly time frame. Momentum has just started to improve on the weekly. We had a positive hike in. We have a huge HHGB and maybe a last engulfing. Bottom line is very simple. This 3-bar range is the level, very clearly. The tough point of this analysis is it's a huge range. कुछ खास करने को नहीं मिलेगा आपको within the auto pack because of the range. 50-50. There are signs of bullishness. It's not bullishness, will be a wrong word to use. There's early signs of a probable trend reversal, mild bullishness. This bullishness was good, but the retracement was equally sharp. So stay away, wait with a mild bullish expectation. Our RRG graphs is also telling us that you can look for long trades from this pack because I'm in the improving quadrant. So that's okay. FMCG was, in fact, auto and FMCG, if you track markets actively, you will know that auto and FMCG are the two sectors which sharply gave the recent rally. FMCG gave away like a literal heartbreak, the way the entire pack has fallen for the last 2 weeks. The night is the darkest before we see some light. And so in the markets, I've also noticed that the selling is the extreme and the pessimism is at the extreme before it bottoms out. However, we can only say that the market has bottomed out when actually we see the bottom. So we can only see that the sun has risen when we see the light, or else we don't know when are we going to see the light. Similarly, this pessimism, this sell-off, this inability to hold on to the bounce back is sheer weakness, sectoral weakness. I had marked this zone quite some time back just to check if I get any reversal from here or not. Are there any signs of reversal? No. Is it a weak chart? Predominantly yes. Again, I would say if these supports will hold, then we should see soon signs of reversal. RRG graphs are telling us it is improving. So both, if you are looking for any sector which may be in the meantime, in matter of few days or weeks, will bottom out and give us a move, you can keep an eye on auto and FMCG. ठीक है? Now we come to weakening. Weakening are the ones जो पहले strong थे but are slowly losing grounds. IT, pharma, financial services, consumer durables, and bank Nifty. Out of which behavior of IT is the cleanest. It has come down straight away. So IT is in the weakening quadrant. Now weakening quadrant का मतलब ये नहीं है that it always has to, from weakening it always has to come to lagging. No, it can go back to leading, then come down, it can go up, like anything can happen. All these are price derived. Our job is, if the RRG graph is telling us that you're weakening, and if our price analysis tells me yes, there are signs of weakness, then it's a confluence, right? Monthly chart is got a bit of a short-term divergence. Weekly is going through a multi-legged correction, very choppy correction. It's not a clean correction like we saw in energy. It's not a clean correction we saw in FMCG. It's a very choppy correction in IT. It had given literal short-term bounce backs multiple times and then fall. Come to the trend momentum, down. Recent breakdown of this zone, staying down, no bear trap whatsoever. So not a good idea. Too early to go long, too late to go short. So wait out and watch. What will you watch for? If RRG graph is telling me weakening and my trend is also down with momentum. So what will I wait for? Ideally, you should wait for a bounce back to sell it. That's the right approach for the IT. So if you're planning onto some IT, any short from the IT, should wait for the bounce back. See pharma, what pharma has done, can you see this? Pharma has come down and now it's trying to go up again. It's trying to go up. And what happened to the pharma pack? If we take a look at the CNX pharma, well, strong chart slowing down, trend momentum down. We had a bounce back, then further down. So not a very pretty picture when it comes to the actual price analysis. RRG graphs is suggesting a bit of an improvement in the relative strength. That is probably because of this rally that we had last week. But nothing more. So pharma we can avoid. Financial services has been particularly interesting. You can see how the financial services has moved, it's picking up again, and your Bajaj Finance and all those stocks. Financial services will also give you a polarity, a make or break, same logic as your Bank Nifty. Bank Nifty also same, we have discussed. And then consumer durables. You will understand better if you take a look at the consumer durables flow from leading to weakening, back to a bounce back, leading, and then coming back. And अगर आप CNX Nifty consumer durables का chart देखेंगे with me, you will see exactly how the price behaved. It did bounce back and it gave away big time. So this is the reason why it has started to fall again. Weak, very, very weak. Use such bounce backs to initiate short. Too late to short, too early to go long, wait and watch. Is there anything? Very, very similar reading, trend and momentum, prospective divergence. Quickly, last, this particular pocket where we have the lagging ones. This is where you can look for short. This is where you can look for contra longs. Okay? That's your energy. Media, I don't have a media index, so I'll deselect it. I'm not a big fan of media also. Metals have gone very choppy in this area. You see, what metals was trying to do was improving. All of a sudden, it lost its relative strength. And now it's very choppy here. I think you will see similar kind of reading in the price also. This area. It's gone choppy. So it's not too sure. It's going strength, losing, getting strength, losing, and that's why the RRG graph is not able to flow properly. Higher time frame, weak. Mid time frame, also weak. Some signs of divergence short term, some kind of a consolidation, range contraction behavior on the daily. कुछ मत कीजिए. Its ideal situation for it will be to wait for a reversal, a sink, positive sink. ठीक है. However, the arrow is suggesting on the downside for the last 1, 2, 3 weeks. It's been predominantly down. We'll see. We'll evaluate. Metals can be an interesting one. Finally, PSU Bank, बेचारा leading तक जा ही नहीं पाया, so it has completely come down. And reality. This flow is very nice. This flow of reality is pretty. Though it did not spend much time in the weakening, वो सीधा leading से lagging की तरफ आ रहा है. If we take a look at the reality, we have done that. It's predominantly same thing. Too late to go short and too early. The PSU Bank, skewed by a couple of names which are index heavy, pretty much negative also. Recently it was buying some time within a range. It has given a range breakdown. So a combination of this with our usual price analysis has given me few cues. Cue number 1, first, Bank Nifty, financials, private bank, last week's high low breakout breakdown will be make or break. Break will have a slightly more weightage to it because of the overall sentiment of the market. That's cue number 1. So those who are looking to go long, those who are looking to, even if you trade the derivative segment on the short side, you should keep an eye on the Bank Nifty, you should keep an eye on the private sector, and etc. That's one. Cue number 2, keeping in mind the RRG graphs, auto and FMCG, if there are any signs of revival. FMCG is a really disappointment, no sign of revival whatsoever. Auto did revive, it did not fall as much as the FMCG, but same logic, last week's high for auto and last week's high for FMCG. Between these two, auto seems to be positioned slightly better than FMCG. If at all such a move comes, we don't know. If at all such a move comes and you see the market going up, few of them have gone above last week's high. The first thing you should check is which stocks or which sector has gone above last week's high. If you find banks and financials and especially private sector banks and FMCG or auto names, not bad, because these names are giving us some signs of a revival. Rest of them are not giving us any signs of revival. Rest of them are predominantly weak. When we are combining the RRG graphs also, we are not getting much Q. So we may continue to see some weakness. Overall, the markets are, if I keep all of these aside, price analysis, chart analysis, the sentiment of the market is the most important factor, and it's negative. Dollar has been the talk of multiple months now, and it has come off quite a bit, very close to 88, down to 86 and a half. However, it's not getting reflected. If you were thinking that every move in dollar will reflect a move in the Nifty, it's not getting reflected in the Nifty immediately. We have seen improvement, or should I say we have seen slowdown of the gains of dollar, and so the USD INR is cooling off. The Dixie is also cooling off, but we don't see that effect immediate on the Nifty yet. Maybe the market is concerned about something else, maybe apart from the dollar. If at all, if it is, we will get to know. But structurally, the way market has been positioned itself after last week's close, for a Nifty level, Friday's high and weekly high. For all sectoral indices, bare minimum last week's high. This is not the market for short-term momentum, long or short. This is the market for either extreme short-term, that is intraday, or extreme long-term. Right? Patience is a virtue. With that, I would like to end the analysis of the market and sectors. Now I'll quickly take a look at your questions. I will stop this recording first.